Hey everyone, this is Jay, also known as jaynemesis on eToro, where I trade as a popular investor. This is our weekly update for week 39 of 2018. This week was a pretty busy week for news, as you can see, so I'm just going to get stuck in. First of all, Elon Musk has settled with the SEC and agreed to pay a $20 million fine. So there was a lot of crazy movement. Tesla shares were trading at around $300 on Thursday, and then on Friday, news came out that Elon had actually backed out of a deal with the SEC, and as a result, the stock dropped by around 12-13% in pre-market trading. Pretty substantial drop there. People were already fearing the worst and kind of afraid that maybe Elon would be removed as CEO, or that the fine could be much bigger, or they could go to court, or all sorts of things like that. What actually happened was the next day, which is so after the market had closed, it was actually confirmed that he did agree to a deal. I believe it's the same deal that the rumors were circulating that he had pulled out of. So Tesla have now got to pay $20 million fine. Elon Musk has lost his seat at the head of the board, and there is now also a shadow board which will be vetting the decisions made by the company, and I believe reporting back to the SEC. So pretty crazy time for Tesla, a bit of a wild ride. I actually managed to trade the event pretty okay, but for the most part I stayed out of it. So interesting news, and I think actually some pretty good news for Tesla. I have talked quite a bit about decentralized exchanges over the past year or so. And when I've been discussing it, I've said a few times that I think 2018, 2019 is the kind of time that we're going to really start to see these hit the market and make a big impact. And decentralized exchanges are pretty important as well, because obviously it means that you can, there's a lot more security because the tokens aren't necessarily sitting with some third party somewhere in someone else's wallet that you don't control. It means there's lower fees because there's no middleman. There's all sorts of cool advantages. And Stellar have just had a new exchange launch, decentralized exchange launch called Stellar X. So Stellar X isn't actually made by the guys at Stellar. It is made by the people who created OkCupid and Kickstarter and a few other cool, pretty big startups in the web space overall. Stellar X has kind of blown my mind a little bit, actually, after reading up on it a bit more thoroughly, on just how impressive it is. So it was first announced back in July, and they promised to create a decentralized exchange that was fully decentralized. The entire order book on the ledger, nothing is basically stored anywhere except from on the blockchain, which is very, very important for a decentralized exchange. On top of that, and this is the really cool thing, the exchange is going to offer 0 fees. So because the fees on Stellar are so low for the current Stellar DEX, which is effectively what they're using here, they can afford to basically reimburse all of the fees to all of their users. That's what they're promising to do. They haven't set a time limit or anything like that. There's a really cool blog post from the announcement when they first announced it, and there's a bit more information up now that they've launched the product, but I don't think I've really seen this anywhere else. So this is pretty interesting to me, and in fact I'm quite keen to try and experiment with this and see how it works myself. So overall, I think this is really, really good news for Stellar. I'm pretty bullish on this. Can't wait to try it. It's really setting the benchmark for some of the others in the industry, such as EOS Phoenix, which is yet to come for EOS. Onto our Chinese section of news, I guess I'm going to call it, because we have 2 items here that are pretty directly related to China. First of all, Bitmain. So it was leaked a few months ago that Bitmain were going to be IPOing. We then had a leak of some documents relating to that, which kind of stirred up a bit of controversy. And now we have a 400-plus page document outlining everything about the company and the IPO. It contains some pretty interesting information, but before I kind of give my thoughts on how this is likely to unfold, or how I think it's likely to unfold, I just want to give a quick background on Bitmain, just in case some of you guys aren't really too aware about who they are and what they do. So Bitmain is a big Chinese company the biggest in the market, in fact, for mining cryptocurrencies. They produce miners and use them to mine themselves, and they also sell them to other companies and miners around the world. Currently, they have around about 85% of the entire market for mining. So they are big, big players in this space. In fact, they are so big in this space that they were pivotal to the SegWit 2x decision on Bitcoin, and really probably the single biggest force leading towards the Bitcoin Cash fork. On top of that, they are also, I think, the biggest holders of Bitcoin Cash of anyone. So in this 400-page document, they actually specified exactly what they're holding. They had a big audit of all of their finances and revenue. Their revenue for 2018 was up by some 800, 900% from last year as of June. And they also disclosed what cryptocurrency they are holding. So, as I said previously, there was another leak which suggested that it was around a million or so Bitcoin Cash, and that has been shown to be correct. So, all of this Bitcoin Cash that's being held by them is really, really substantial. 1 million Bitcoin Cash. This is around, in total, all of their cryptocurrency is around 30% of the company's assets, which leads me to my reasoning for why I'm slightly concerned about Bitmain and about Bitcoin Cash, and why I will be steering very clear of this IPO. So although there's been no price mentioned for the IPO yet, I think the big danger here is that the bear market lasts a bit longer than Bitmain expects, or simply that they get surpassed by one of the newer players into mining, such as Nvidia, AMD, Samsung, who recently threw their hat into the ring, or maybe another startup that's involved in the space. There are quite a few. The reason that this is bad for them is that effectively, if mining becomes very, very marginally profitable and they're investing heavily in their AI and things, which they mentioned throughout this big pile of documents, then I think they're going to have to sell some of these assets. And if they have to sell any of their Bitcoin Cash, that's going to have what effectively is a looping effect. So if they sell some Bitcoin Cash, let's say they sell 5% or something, that is enough Bitcoin Cash from the entire Bitcoin Cash ecosystem to drive the price down substantially. And if the price goes down substantially, then their mining becomes even less profitable, and it becomes less profitable for other miners as well. So they'll have decreased sales to other miners and decreased revenue from their own mining. So you can see how this could very quickly spiral out of control. And I just think that it's very, very risky, given how much proportionally they have invested in Bitcoin Cash. So that's kind of the little piece that I wanted to talk about. I could be wrong. They could be successful. They have got a substantial advantage at the moment in the market. But as I said, Samsung have just announced that they are going to be getting involved in this market, and they have a very good reputation for hardware. Likewise, I think both AMD and Nvidia are poised to jump into this if they need to, and if they can see that it's a good revenue opportunity for them. The second story in our little Chinese series that we've got going on here is about EOS. And normally I like to be good and bullish about EOS, but I'm going to give you some bearish news. And this is something that I've expressed concern about a couple of times in the past. I've had some pretty lengthy discussions with a couple of my friends, actually, that are big into EOS, and with Jesse as well. And I think even a few of you guys on Twitter about this before. So EOS has currently got a big problem with block producers. And the big problem that they have is effectively an oligarchy is forming. This is something that I suspected could happen when I first read up about how EOS works and the voting system. As much as I am a fan of delegated proof of stake, I do really think that it should be one vote per account or some sort of system like that, rather than effectively one vote per dollar of EOS that you own. Which is how EOS works. So what's happened here is basically a bunch of the Chinese block producers have kind of grouped up together, and there is potentially there's allegations of vote buying and all sorts of things like that going on, which has led to the point where I think it's 11 of the top 21 block producers, last time I checked, are from China. This is obviously very, very bad news. Now, EOS isn't susceptible to a 51% attack, but it is susceptible to effectively a 66% attack. So that's how much of the network you need to control, how many of the top 21 block producers you need in order to effectively censor the network or perform some sort of an attack. And we have got dangerously close to that already. And EOS has only been out for a few months, and obviously it's still growing and expanding. But we're seeing pretty regularly some of the most popular block producers from the public opinion side of things, and from even my own opinion. Block producers like Cypherglass, EOS 42, EOS Authority, EOS Canada, EOS Rio, all of these block producers that are really, really well known and well liked by the community are actually struggling to stay in the top 21. And they're struggling against effectively massive Chinese block producers, including the likes of Hubi and Flight to Mars and things like that. How does this get fixed? That's the question. And currently, there aren't really any answers at the moment. There are, some of the Chinese BPs that are involved and have been accused have come out with statements about how they're going to try and prove transparently who's voting for them and where their money is and all of this sort of thing. But really, I think fundamentally the thing that really should change here is the way that the voting system works. And this is something that I've believed since before EOS launched, and I had my concerns about it. But I do think that we will come through this in a healthy state, even if potentially we end up just forking EOS and creating a second EOS and kind of changing the rules ourselves as a community. So that's effectively all there is to share, really. There's no conclusion to this. This is an ongoing issue, but I'm not too concerned about it, even though I said it's bearish news. I'm not too concerned about it because obviously we've had the RAM issue, we've had issues with the network going up, going down a few times. We've had the spam issues as well. So we've overcome quite a lot in EOS already, and I don't really see this ending terribly. I just think that it could certainly. It's a cause for concern and something to be keeping an eye on, I think, over the next few months to see how it develops. Now that we've got the news out of the way, let's take a quick look at the headline stats for this week. 1.8% portfolio change, 1.44% realized profit, 34 trades were closed in total, 32 of which were profitable, 2 of which were unprofitable. Both of those were AMD, which, by the way, is the most traded instrument with 8 trades in total. So as you can see, despite all of that news, it's actually been a bit of a quiet week in terms of my trading for cryptos. I have been shorting a bit here and there on Bitcoin Cash, but those are still open. EOS, small green trade, a little bit of profit for 3.5%. This actually is one of the trades that was reopened by eToro after the bug a few months ago. I just kind of wanted to reduce exposure a little bit ahead of this event really kind of growing into what it is now, just in case the market decided to drop 10 or 20% or so, so that I could rebuy in. So it's just one position. I'm not too fussed if the market continues moving up. I would quite like that actually. Stellar was the second position. I think I'm trying to remember, but I believe that this was actually effectively a swing trade. But obviously, the spreads are substantial, and I ended up giving up on the position perhaps a little bit early. I think I sold it at around 26 or 27, which is actually where the price is 0.26 or 0.27. That is, which I think is roughly where the price is at the moment. So not too bad. I'm not too unhappy with it. Profit is profit at the end of the day. So let's take a look at the stocks, starting with Tesla. Tesla was a quick short position by me, day traded based off of that news about Elon Musk and the SEC. As soon as the market opened, I knew that I wanted to short it and try and scalp the trade effectively. So I used 3 positions on 2x leverage for 1.7%, 4.3%, and 3.6% profit. Importantly, I was very, very, very well aware of the possibility of this changing overnight, and so I did close before the weekend, which is lucky because obviously Tesla has shot straight back up to exactly where it was before, after everything was kind of solved. So potentially an opportunity missed for a long position there, and I would be lying if I said I didn't consider opening a long, but I think it was just a bit too volatile and a bit too risky for me to go for that. And hey, we still made some reasonable profit here. We didn't get caught out by the spike back up again. And actually, I may be looking to trade this ahead of their next earnings because I still suspect that they are going to impress next earnings based off of what was said last time. Activision Blizzard, 3 trades here, 0.8%, 1.7%, and 2.1%. These were all pretty quick trades. I believe I talked about it briefly last week. It might have been the week before where I was discussing their Battle Royale mode in the latest Call of Duty title. I'm still a bit too skeptical about the potential for that to really impact the share price long term. So I have decided to just close everything out. You'll see that in next week's update, I guess. I just don't think it's really worth holding onto a position since the stock seems pretty hesitant to move away from that like 70 to 80 range at the moment. So I'm going to play cautiously and put my money elsewhere. I think, there's a reasonable profit to have made. On to AMD. So 8 trades here, 4 of them short, 4 of them long. Apart from the 2 unprofitable trades, it was between 1.6 and 2.7% profit, which isn't great, but it isn't terrible either. The stock has been, for the most part, pretty flat. I did close 2 of my big losing short positions, unfortunately, at pretty bad timing by me. I actually thought that we were about to break up above $33, but we didn't, so I ended up giving some pretty terrible prices for both of these. Which resulted in effectively the combined effort of my trading on AMD resulting in a loss. So those were closed at 8% and 24% losses. Square, on the other hand, has given us some very, very nice profits. I cashed in on some of the slightly more long-term positions, just kind of cycling through and refreshing. I'm still trying to trade it actively, but as I've said numerous times, I want to keep exposure to this stock because I'm very, very bullish on it. As we head towards 2019, 44.2%, 32.8%, 6.6%, and 5.3%, and a 2.0%, which is a lot of percents for me to pronounce. So some very, very healthy profits there. Extremely happy with the performance of Square. I expect good things from Etsy as well, although I think it may be slightly slower in terms of its growth, so a lot of exposure there as well. But I'm overall extremely happy with how Square is going at the moment. That brings us on to Amazon. So 3 trades here for basically 3% on average each, roughly. This is an interesting position at the moment. I've been a bit patient with Amazon. I saw it breach the $2,000 mark, and I wanted to wait until it was below that before really starting to get back involved with the stock again. I haven't traded it for a few months. I was a little bit wary about how they're doing with Amazon Prime and the kind of movement towards slightly more independent e-tailers, such as those that you find on Wix and on Shopify and on Etsy, for example, which is why I'm so heavily invested in those. But Amazon does just keep growing, and I think the main cause for it really has to be their cloud stuff. The recent stuff that we saw with the shops is also very, very exciting. So I have kind of turned more bullish again because I've just sort of started to ignore the main original purpose of Amazon and actually really focus on all the things that they're doing around that. And I think the stock has still got a really long way to grow potentially. As crazy as that sounds, they've basically doubled in the past 2 years or so, but I think they still have further to go. So I'll be hoping to actively trade it and keep some exposure for the long term as well. Netflix have had a really slow couple of months, ever since the last earnings report, really, where they underperformed and didn't really hit the mark. But recently it's recovered a bit. I took the opportunity to take some profit for 4% and 7.3%, and of course start to trade it a little bit more actively again, especially as we head towards the next earnings. Shopify, another example of a really nice little day trade here. So 4.6% profit, 2 times leverage. super happy with that. I did the same on Nvidia. In fact, actually, I think it was opened the day before, but it was a very, very similar trade. 3.9% using 2 times leverage again. I have started using leverage a little bit more recently, actually. Onto Wix. Wix actually hit my target of $120 towards the end of last week. So I was closing positions as I was getting closer and closer to that. I believe today we actually hit that. I was preparing for a move down to about 116 or so. It has gone actually a bit further than that. So currently my positions that I've been rebuying in with are at a bit of a loss, but I'm still confident that it should head back up to that 120 range. I am actually going to go back and listen to some of the previous earnings calls from Wix and try and make sure that I'm still understanding everything correctly about the stock and potentially reassess and reanalyze it overall kind of from the ground up, because it's reached my target before I thought it would. And now that it's reached it, I've kind of realized that I'm not terribly prepared for where it's likely to go from here, and I need to maybe look around, see what some of the other analysts are saying, and again, go through some of the core fundamental stuff and basically decide where I think this is going long term. I am a user of Wix, and I actually think it's a very, very good service, and it's been growing nicely, but I'm a little bit concerned about how it's going to compete in a world where we have things like Shopify. So yeah, planning to go back and to the drawing board a little bit on Wix, take a look at it and do some more digging. But in the short term, I still have quite a few positions that I'm playing around with around the $120 mark, because technically the stock doesn't really show too many signs of slowing down. Etsy, 2 trades closed this week for 8% profit and 13% profit. I believe one of those was on 2 times leverage. Etsy is definitely a stock that I'm excited about. I still vividly, I think out of all of the earnings calls that I listened to during the last earnings period, Etsy is the one that really stood out to me as exciting. They clearly have a lot of things planned on how they want to improve the website and the service and where they can grow it. And I think I'm going to be using this opportunity as we're sort of consolidating around this $50 mark to really build up a big position here, possibly one of the biggest in my portfolio, along with the likes of Square. So pretty bullish on Etsy, pretty bullish. Snapchat, 0.5% profit. I think this is my smallest trade of the week. I don't know what I can say about that, really. It hit my trading stop loss a lot earlier than I expected it to. I was hoping to get 4 or 5% profit out of it. I'm still wary with Snapchat because it's in new territory. It's never really been as low as it is at the moment before. And actually, I think they, judging by the last couple of earnings calls, they have sort of turned it around a little bit. I'm still not really sure where they're going to sit in the long term in terms of if there's really a market there for them, if the advertising spending is ever going to really be there for them, and what's stopping competitors such as Instagram, which has been taking some nice swipes against Snapchat recently, from taking them out. But I am, as always, keeping an eye on it. Traditionally, I have made some pretty nice trades on Snapchat in the past, so I will be keeping it on my radar. Finally, last position, 1% profit from Disney. I didn't write anything else about it because there's not really that much to write, I guess. They recently had quite a bit of drama with Sky over the idea of the Sky bid that was won by Comcast, and as a result, Disney obviously decided that they wanted to get rid of all of their shares instead of join the bidding war for it, which they were involved in before with Fox. So yeah, I don't think it's a stock that's likely to grow that quickly at the moment. I think honestly that I need to really wait until their streaming service gets a bit closer to fruition before I play around with the stock too much, because it's given me some pretty low returns for the most part from my recent trading of it. But hey, 1% is 1%. So let's take a look at the performance. As you can see, this week was pretty good for us. Green on both the portfolio change and the realized trades. September, on the other hand, did end up closing in the red. It's not as bad as it could have been. If you remember when September 1st started, we were down at around 11, 12% in the red. And so we've halved that on the portfolio change side. And on the realized trades, we did end up closing minus 3.14%. Again, that's probably primarily due to the 2 Ripple trades that got called. That was from last week. So, it's not great. But if I look at my performance retrospectively from this past month, it's pretty clear to me that week 38 was really what killed it for me. And the 2 big things in week 38 were the Ripple trades, and I also closed a few other legacy positions in cryptocurrency as well. So I think it's pretty clear to me that if I just sort of stick to the stock stuff, especially at the moment, until the crypto markets have really decided what they're doing, and just play it a bit safer on the crypto side of things, we should be able to turn around a decent profit in October, hopefully. So I'm feeling pretty confident actually in how I've been performing recently, especially on the stock side of things. So looking ahead, as I said, I think October could be a good month for us. Traditionally, the last quarter has been my best performing quarter, I think, as long as I've been trading. I don't think I've ever really had very many bad Q3s, Q4s, whatever you want to call it. Q4, I guess. If we look at what's coming up, we have Swell by Ripple that actually started today. I haven't seen anything about it yet. I actually don't really expect very much from this. They're not live streaming at this time, but there are a few websites live reporting on it. Last time we saw a really big pump and dump, and obviously we just had that big pump and dump in Ripple about a week ago, which is unfortunately what caused me so much pain with my short positions. But I actually think the drama, for the most part, is probably going to be over for now. And I don't really expect that we're going to see that much, aside from maybe a couple more partnerships announced for Ripple, despite the fact that they've released XRapid, which could lead to some pretty good partnerships and good growth for them. Finally, earnings season is approaching. So Q3 earnings is coming up. I don't think that there's anything that I trade that's approaching until maybe towards the end of October. Most of the earnings will be in early to mid-September. But certainly this one is going to be a very, very exciting one. I think Square, Etsy, Tesla, Netflix, there are a lot of stocks that I think could move very, very dramatically this earnings season. Of course, we're also building up towards Christmas as well, so the game stocks tend to do a bit better towards this kind of time of year, and obviously there will be a substantial pump in things like Amazon potentially as well. So there's a lot going on. There's a lot to look forward to. I think the next month is going to be a good one. That just about does it for me, guys. Thanks for watching again. Sorry that this is kind of a late one. There was a lot of news to cover in this, and I really needed to make sure that I knew my facts on it all and just remembered it all. So it took a few attempts at hashing this out for the camera. But hopefully you guys enjoyed it, and I will see you all next week.